Trading for the month of March 2025 has come to an end, and we are stepping into the month of April. I will be taking a look at what the first trading week of April looks like, what the market is doing currently, what I anticipate, how I plan to trade it, and the days on which I'll be looking to take those trades. So today's the 30th of March. We still have one more trading day in March, which is the 31st, tomorrow, Monday. But in the grand scheme of things, next week is the first trading week of April 2025. I want to take a look at the monthly calendar first of all. We can safely assume that March's calendar was this huge bullish, sorry, that March's candle was this huge bullish candle. And now this is how last week closed. It closed as this doji. We still have a lot of imbalance to fill in this area. We are still at the top, near the top of this range. And so there is room, there's potential downside room for price to come back into somewhere in this region before continuing bullishly. But before we go into the nitty-gritty, let's take a look at the calendar because that is where we always start our preparation for the new trading week from. On Monday, March 31st, we can see that the whole day has German preliminary CPI. Doesn't matter, doesn't impact the market because now, say for the whole day, the market is just going to be flying. So Monday is a safe day to trade if a setup presents itself. Now, Tuesday is interesting because at 3 p.m. my time, which is UTC plus one, we have ISM manufacturing PMI and JLTS job openings. Wednesday has ADP non-farm employment change. It's a pretty tame, pretty mild news release, just one on the dollar. You can also see that Thursday has unemployment claims and ISM services PMI about an hour and a half apart from each other. So this would be a tricky time to be in the market. And the big dog on Friday, as usual, first Friday of the month, is NFP. Things to note: virtually all the news that is coming out this week is on the dollar, so that's good. I don't have to be mindful of when dollar news is coming out versus when euro news is coming out versus when pound news is coming out or New Zealand news is coming out. Not that New Zealand news ever matters to me because it almost always comes out when I'm not trading. However, the way we navigate these days is Tuesday, I can take any trade before and up till a few minutes before 3 p.m. such that if it's 2:30, 2:45, then I don't want to be entering a trade at that point because whatever my entry is, there's a chance that manufacturing PMI comes out and messes with it. So I'll be looking to be in and out of my trades before 3 o'clock on Tuesday. Similar thing with Wednesday. I'm taking a trade in London session or I'm waiting till 1:30 at the earliest for me to take a trade. Similar situation with Thursday. I want all my setups to preferably come during London session and be done before 1:30. But if for any reason at 1:30 or shortly before I don't have a trade, I'm not taking one. And I'm also not taking one until after ISM services PMI comes out because that 1 hour 30 minutes in between, I don't want to risk being in the market because you don't know what these two news releases could potentially do. So if no trading setups print before this 1 to 2 hour window, I won't be trading. And of course, I'm staying out of the market for the whole of Friday because it's NFP day. Now, let's go down. So we can see that this huge weekly imbalance still has a lot to fill. If we go down to the daily time frame, we can see now something interesting is happening here. This downtrend on the lower time frame, of course, is potentially a retracement of this range. Now, for this retracement to validly suggest to me that the bullishness is about to resume, I would like to see price retrace into discount of the range. So ideally, I want to see price come back to this daily fair value gap that overlaps with the 75% range, that overlaps with this order block right here. And that is the perfect picture that I would like to see. So I am still anticipating bullishness. That said, this bullish range is so powerful that if the market intends to go parabolic, there is a real possibility that, because you can see price has already started dipping into this imbalance, it has tapped into it and there has been an initial reaction away from that point. There is a real possibility that price just continues ripping higher from here. We'll see. We don't know yet. So how do we navigate it? How do we trade? Well, as you can see, a low was printed here inside the higher time frame level. Now, if price decides to come down, create another low on the lower time frame, another bit of time-based liquidity, then takes both lows out and gives me a bullish sign, then I'll look to take a short-term bullish trade. I'm not predicting that whatever move originates from here is going to be what will take us back to these highs for the higher time frame trend to continue, but I can reasonably anticipate a reaction after a low has been taken out in an uptrend after price traded into a point of interest, which is an imbalance. And so that is one way to look at the market. Another way that it can be done is on the lower time frame. We can see that there's this 4-hour imbalance over here. So there's also a real possibility that now on the lower time frame, price is looking to trade back up into the premium of this range, which would be this 4-hour fair value gap, to then continue trading lower into the discount on the higher time frame level. And so for me to take this trade, what I would want to see is for price to come up to this point. Let me get rid of this. To come close to the 4-hour imbalance, create a short-term high, take that high out. Then I'll look to take a short trade to the downside. So those are the two scenarios in which I'll potentially take a trade. Now, there's a third one where you can see that if this scenario is what is going to play out, then it means I can expect some short-term bullishness. That's the first thing. Now we can see that on the lower time frame, this on the 4-hour, a fair value gap has already formed. And so if price truly intends to trade up into this imbalance before then trading down, then it means that I can anticipate price to create a low somewhere above this fair value gap, sweep that low, then give me a bullish indication that it wants to continue going higher. And so I'll take a long trade. So my bias is long trade potentially into short trade potentially back into long trade potentially. That is what I am anticipating, and depending on which of them happens. So for me, I don't need to know exactly what the market is going to do. I don't need to know when it's going to do it. I don't need to know what is going to happen, when price is going to come here or when price is going to, all I need to see is that when price creates signatures in price, fair value gaps, liquidity pools, sweeps the liquidity pool into a fair value gap, then gives me an indication that it wants to go lower. When price suggests to me that this is what is likely to happen, that's when I execute, that's when I get into a trade. And so the price action on the pound is terrible, so ugly. Well, similar situation. We have a 4-hour fair value gap here. We have a low. This is beautiful. We have a swing low sitting on top of a daily fair value gap. This is prime setup for long trades. So this is also a potential trading opportunity, but we're still a good distance away from that. Let's see if New Zealand has anything to offer. Now, New Zealand is interesting because it's in this range. And so if price decides to take out the low of this range and starts pointing upwards, we can anticipate it trading back into this daily fair value gap. So then, so then potentially trade to the downside. So depending on what happens and when it happens, all I want to see is higher time frame area of interest, which is the fair value gap. I want to see a lower time frame time-based liquidity sweep into that level. Then I want to see indication of price moving in my preferred direction. That's how I'll be looking to trade in the first week of April 2025.